hosting a venture capital firm on Startup Central that has been an early believer in the India story. This is a VC firm that was one of the first investors in Flipkart when Sachin and Vinny Bansal were working out of an apartment. It's been an early believer in startups like Swiggy, in Freshworks, in Spinny now, in ChargeBee, CureFit, the list goes on. And if you haven't already guessed it, yes, we are talking about Accel, which is back with a new India-specific fund. It's one of the largest ever for early-stage investments. Joining me to talk more about this is Shekhar Kirani. Thank you so much. It's always a pleasure talking to you. Like I said, you folks have been one of the earliest believers in the India startup story, and now you're walking the talk with the seventh fund.
Thank you. It's my pleasure to talking to you all through ET Now. Yes, this is one of the largest $650 million fund that we have raised for investing in entrepreneurs targeting India as a market, as well as entrepreneurs coming out of India targeting global markets. Plus, we'll also be doing a little bit of work in Southeast Asia as well.
Okay, so now, obviously you're all looking for the next Freshworks, next Flipkart, next Swiggy, Spinny, ChargeBee, Accel, the list goes on and on. But this fundraise is at a very interesting time, right? It's at a time when tech seems to be ending its love affair with investors, at least in the public markets. In the private markets, are you still seeing that kind of enthusiasm, exuberance?
This is a business of a long 10 plus years where we partner with best of the founders. So timing in a 6 months to a year horizon is almost impossible. We are looking for partnering for durable, long-term, iconic companies that would be created. And when you create a phenomenal companies directionally, the market will take care of itself. So since this is an early fund, we get in at so early at seed and Series A, that has not been affected so much with the whatever market corrections or the war situation today. But having said that, the timing cannot be better for founders to be starting a startup right now, especially in India and Southeast Asia, where the underlying infrastructure exists, where one can build amazing startups when digitization is happening. And post-COVID, there is a massive pull in the market.
Oh, absolutely. Now, in recent times, we have in India seen internet consumers balloon to what, 200 million? It's supposed to, hit 500 million in a couple of years from now. So the opportunity is, of course, immense. And I think India's getting a larger premium with what's happening in China. We take all of that. But you tell us, with this new fund, what kind of founders are you looking to bet on? What kind of sectors? What are the new trends that you're looking at investing in?
Great question. So with this fund, historically, Accel has been investing in digital startups that is influencing one of the markets, either consumer, B2B, global SaaS, fintech, and digital health. Now, this has been an evergreen list for us. And in this, there are nuanced categories like vertical marketplaces, B2B marketplaces we have been doing. Developer tools is another category we have been doing. And recently, we have started looking seriously on Web3, the crypto Web3 world as well. We have done few investments. Some of them have scaled very rapidly. One of them is called Falcon X. In less than 4 years, they've gone from zero to almost $4 billion value company. It's one of the largest institutional brokerage firm across the globe. But that all are the exciting things we are looking for. That is on the categories. From a founder's perspective, we are truly looking for those who understand the market, who understand the customer, and with a high intensity to solve the problem. This is a 10-year journey, and in the 10 years we have come so early. We need to partner and work with them. So we have done 200 plus investments. Typically, we look at more than 2,000 companies to invest any given year. And sometimes we get around 4,000 applications. When we start, for example, we launched this Adams program, we had 3,000 applications for 15 slots. So overall, we look for the best of the best to partner and work with them to make these iconic companies.
And Accel typically wants to be the first investor at the cap table, right? That is the philosophy that you folks follow. That's why seed rounds are so important, pre-series A. I take all of that. But once again, what kind of founders do you look for? Because, I think that's what a lot of the people who are watching this show will want to know, that what will it take for me to even approach Accel, get someone to send my pitch deck, etc., etc.?
So there are a couple of nuances to this question. First of all, what we do is we understand the category. Suppose we are investing in a supply chain category, and there is a founder who wants to raise money for a supply chain idea. Expectation number one is the person who is applying has a deeper, better knowledge than us. If we are smarter than them, then it's a non-starter, for example. Secondly, they have understood the customer problem and the pain point immensely. If they're starting a startup because their friend started and they did very well, and therefore it is a new type of job, it won't cut it. It has to be a very serious affair in terms of ability to look at the market, understand the pain points, and make sure that they have a unique perspective and the idea to make their product or a solution build enough moats and scale rapidly. That's the second one. And third one is the market big enough? Lots and lots of founders apply to us, but they pick small problems. From a venture backable startup ideas perspective, the problems have to be massive, big, underlying market sizes of multi-billion dollars, so that in case you do succeed, it's a massive outcome for you, for your employees, and all the investors. So that's what we look for in founders who are trying to raise from Accel. One more point I would like to add there as well is
it's always good to do the do's and the don'ts.
Yeah. On the don't list is this is a partnership for 10 plus years. We really need to make sure that, we can work together as a team, and making sure that the founders are compliant to the market, the ecosystem, the expectations, and the government. So these are very critical for brands like Accel, because we are raising from...
So Shekhar, taking forward from this, $650 million that has been raised during this unprecedented time is one of the largest ever funds raised for investing in early stage for startups. How difficult was it to convince your limited partners? You're just trying to get a sense of, because things have changed. So while we talk about, it's a 10-year long story, to get checks is always a tough battle, right? Especially when there is so much volatility and uncertainty.
Excellent question. So we are now raising the 7th fund, right? We have been on the ground for close to 15 years. And we have built relationship with our investors. And this is a same set of investors from whom we raise money across the globe, whether our Accel London team or Accel US team or Accel India team. Now, remember, our fund 2, which was a Flipkart fund, has done exceptionally well. And we have returned quite a lot of money to our customers. Our fund 3, which is our Freshworks fund, it's also now, it's gone public, it is liquid, in the process of distributing our capital back to our investors. And all of these companies are in our funds across are doing exceptionally well. So far we have raised 1.5 before this fund, that is up to fund 6. And the market cap of our companies is more than $100 billion today. So you can imagine the value we have created in the market and how excited our investors are. So typically for a top tier fund like Accel, it is opposite. There are more people who want to invest than we can accommodate. And secondly, we don't want to raise the fund sizes too much because at the end of the day, we need to return the capital back to our investors, which goes for tremendous good causes. So it is important to kind of have the right size, and we believe 650 million is a perfect size to raise, and great support from our partners, our investor partners.
Now, you did talk about Web3 and crypto, so I want to ask you this one question. And we started to hear this a lot, right, from venture capitalists now, that is the new theme. It's a flavor of the season. Sequoia is doing it, Lightspeed is doing it, Elevation Capital is doing it, Accel is talking about it. How big is India and Web3 at the moment?
Yeah. So first of all, we have been doing Web3 investments from our Fund 5 itself, or Falcon X, which I spoke to you about, was our $2.5 million seed investment, and now it is valued $4 billion. So you can do the math. So this is started in about 3.5 years back. Since then, we have been looking at our thesis in terms of what makes sense for Web3 companies to be investing. So Accel is, building our prepared thesis around the foundation technologies, the protocols, using blockchain as a technology for enabling new use cases, or even new applications that are coming on top of Web3 itself, native Web3 companies. And the second thing is Web3 is no more India specific or Middle East specific or US specific. It is a global platform. Whether it is crypto is minted anywhere in the world, is part of the global blockchain network. So we have met pretty much every team in India, every team in Southeast Asia. We have been working closely with the Accel in our London team and Accel in the US team. And we have a joint way of looking at this market and identifying the best of new age use cases and new age protocols that are coming in this market. So, it's still early days, as India has got now few exchanges doing very well, but the new age modern category, distributed apps is just starting out.
I can't have you on the channel and not ask you this one question, which is that, the era of easy money may soon be behind us, right? At least kind of signaling that we're getting from the US Fed. What is your larger advice to the audience that is tuning in? Because, when you hear the public markets, they're demanding a clear road to profitability. They don't want to see cash burn from the listed space, at least. They don't want to hear about, profitability coming at the cost of hyper growth.
Yeah, great question. Historically, you have to look for three elements. One is, the market, how big the markets are. The same questions apply even for public companies, as at our early stage, what we spoke about. Is the market big enough? Secondly, the companies we are looking for, they have great unit economics in the sense per customer or per transaction or per unit of work, do they make enough profit pool, enough profit margin? That's a very critical metric. And the third one is whether they're able to grow fast with leveraging their existing technology, existing brand, existing infra, and are they getting the leverage of the current set of investment they have made? And if these three aligns, yes, companies may be not so profitable at the time of public, but over time, they become massive printing presses over time. And that's what we have seen in globally. That's what we will see in India as these companies scale. The modern digital platforms, when they start growing 30, 40, 50% year on year, eventually they will throw so much of cash. So the profitability at the time of IPO is important, but more so important is unit economics. If the unit economics is right, and if they can continue to grow, and I would say the profitability will happen in a couple of quarters.
Okay, because there is obviously a fear right now, whether it's from retail investors to other founders, or maybe even other VCs. You've seen some of India's leading brands, leading startups now are trading with deep discounts to the IPO price. Some are even fallen below their IPO price. So I thought I would love to get your views on this because you have to get it right.
Yeah, so our advice to our founders is build high quality companies. Market will determine your value eventually. In a short term basis, it will go up, go down, depending on various factors that you cannot control. What you can control is build high quality companies that take less money and generate more money. As simple as that. That basics are evergreen and you can't ignore those.
Okay. Now coming back to the fund, you've done really phenomenally well, like you were talking about when it comes to the consumer tech. Flipkart, Swiggy, CureFit, SaaS, Freshworks, ChargeBee. There are many many examples. FinTech as well. You've spoken about Web3, but now going forward, at a time when we are seeing so much activity when it comes to manufacturing, for example, how would you want to use your fund for that? Agriculture is now being seen, for example, as a sunrise sector. And after a pandemic, I do hope healthcare is taken more seriously.
We map out all these ecosystems. As a fund, I think we have more than 5 investments in the agroeconomy, all the way from AgroStar, which helps farmers with their input and output, getting better yields, to Ninja Cart to distribute the farmers' produce to Kirana stores and other B2B places. Then Clover, which helps and enables, asset-light model of vegetables, fresh vegetables, high quality vegetables that they produce, to Samunnati, which gives the fintech on agro for both exports as well as in India, one of the fastest growing fintech company via loan. So if you look at it, it's vertically integrated. We have several companies and continuing to grow in the agro economy. Then let's look at B2B manufacturing. So one of our company, Infra Market, which has grown exceptionally well in the last few years, is an amazing company that does almost all infra, steel, cement, for large scale manufacturers on one side, and connecting to the dot to the users of these things on the other side with the digital tech. The same thing is done by a company of ours called Zworks, which is again scaled to a multi-billion-dollar valued company, which connects the manufacturers in India to the people who want something to be manufactured. So they take orders across the globe and identify best of the manufacturers, help them assemble and get the product built with specs, with time, with quality management, so that both sides of the marketplace are very happy. The same thing we have in Kogoport, Moglix, and several of other manufacturing related as well as supply chain companies that enable this entire ecosystem to become digitally efficient and move the production and consumption and transportation of these things in a wickedly fast way.
Okay, my final question to you, and I do hope you will be candid with this one. Now, we've also been hearing, is this going to be the season of markdowns? How term sheets are now taking longer to close? There'll be concentration of capital for those startups that have a visible and a clear road towards profitability. Is there now a case of FOMO turning to JOMO? Fear of missing out? Has it become joy of missing out?
I don't think so. So most of the private companies, private investments, especially in early stage, the best times to invest are during down times, not during up times. So this is the best time to, as I said, start the startup, raise money, because the journey is 10 plus years. You don't know how the market would be, and you can't predict that market. And use this time to be able to build great ideas translating into great products. And I would say we haven't seen this aspect at all in the early stage. Obviously, at the growth and late stage companies, there is a little bit of noise about, hey, pulling back term sheets and so on. But we haven't seen that in any of our companies so far. All Accel companies are, able to do what they've set out for, they've raised. And so far, at least I'm not aware of any of our companies where the term sheet has been pulled out, or companies saying, I don't want to raise, on a daily basis, at least weekly basis, we are seeing one or two of our companies raising money. So